The Hercules Horseman here. It's June 13th, 2024. Yeah, I just did a video. I don't know. I'm not sure if I'm gonna upload it. It ended up being a big rant. Anyway, thanks for the sponsors. What I thought I would talk about, actually, or begin with, I'm gonna talk about a few stocks. But so I don't know what's up with the Twitter algorithm, but I'm getting bombarded by a lot of Swedish accounts in my news flow from accounts I don't follow, and a lot of them recently have been. I mean, I assume I think the stock market in Sweden is doing well. I think, or like Dow 30, for example, is around all-time highs. So I mean, it kind of goes without saying that if the stock market is roaring, everybody's looking smart. Nobody can make a mistake, pretty much, because everything's been going up. It's a bull market, and it's at an all-time high. So basically, on average, 1 second. On average, most people will be up. And it's like most people don't. It's like what Rick Rule says in the beginning. He what did he say? He said, I confused something like that. I mistook a bull market for brains. Because I remember, I mean, when we've seen hot stock markets and everybody's been doing well, everybody thinks they're smart. And the brag posts come up, right? So what I find interesting is, like, I've seen a lot of these posts. People put up individual stocks and they show their buys, let's say, or sells. But obviously everybody puts up what looks good. And it's typically, again, one stock, a single stock. Often it's no mention of, like, okay, how much of the portfolio is in, how much are they actually up on the stock or anything. But it's like this, picture like this. The funny thing is, like, how impressive is this really? And I see a lot of these. How impressive is this really? And again, it's like, we don't see what happened before. We don't know what's going to happen after. This is obviously someone that's been averaging up. And right now, again, because we're in a bull trend, it's the opposite of when you're dip buying in the junior sector, for example, where where until the very day of the bottom, which could be minus 80% in this sector, every single buy looks stupid. While in a bull trend, it's obviously the opposite, especially if you're at an all-time high. Every single buy you ever did is showing profits because, it's at all-time highs. But again, how impressive is this? It doesn't say how much they added, or this person added. Maybe bought a bit here, bit there. Maybe he bought a lot here. So what do you think his average price is here? Is he up a shit ton on this stock? It's up 24% this year. He's not up 24% on his average buy here. But that's my point is, you're often people wanna, and it's like, hey, everybody wants to look good. It's not like I'm excluded in that department, but I try not to. I don't really remember the last time I bragged about a buy in any particular stock, really. I might throw something out there if someone bashes me, but I try not to do it. But why? Because it's obviously stroking my own ego, and I'm not saying I'm never going to stroke my own ego or never want to look good, but what am I really accomplishing? Yes, might make me feel big and strong and smart and all that. But people who see this stuff obviously are gonna, especially if you're a junior investor like me, where it's like, we've had the opposite. We're not nowhere near all-time highs. We're barely off the bottom. But you see people like, oh, it looks so simple. It's like, oh, every single buy is in the green. It's like this guy can't do a wrong turn in a sense. But again, in reality, do you think this is a great investor? I doubt it. I actually doubt it. If you're, I just checked through his timeline a bit. I mean, if people brag about what they can brag about, it's like, why do you think you see a ratio of like 40-1 in terms of bragging about individual stocks, or individual stock performance, or buy and sell places in a particular stock, but you almost never see anyone brag about their portfolio? A few do, yes, a few do. What's the most important for anyone? If I own one stock that I had a 1% position in, it's up 200%. And I brag about that, let's say. The other 99% of my portfolio is down. So I'm not going to put a brag post about my portfolio. I'm going to show this stock that I'm actually up on. And I'm looking smart, right? So it's like, those are some of the things that, again, it's like in poker. I find it interesting to trace back or track back, reverse engineer, whatever you want to call it. Like, everyone does everything for a reason. Every post anyone ever put up, every word, there's one or more reasons behind it. There's, excuse me, usually one main reason. In this case, I think it's pretty obvious. He wants to feel like he's smart. He wants to make others think he's smart. And again, very human thing. So I'm not bashing him per se, because he's human and indulges in ego stroking. But this is what you're going to see a lot of the time. And again, if you put that stuff up and people see this, and obviously, I mean, it's kind of made to extrapolate. Whoa, if he did such good buys, or I mean, such good buys, he's, averaging up, whatever. We don't know what his average is, but it's like, at face value, obviously, okay, you put something up. So I mean, it's the same with the especially girls on Instagram. They have a ton of pictures where they're sitting at fancy restaurants, having a glass of wine or champagne, stuff like that. And you see a lot of those pictures. And it's like, whoa, that looks expensive. That looks exclusive, whatever. Okay, why do they do that? Because they obviously want to look very, classy. Like, high maintenance women. That people are going to envy their, quote, success, etc. I mean, it's pretty obvious. But when you think about it, it's like, okay, they want to look like they're millionaires. They have this classy lifestyle. They might work at, Costco, whatever. But they take pictures when they're actually enjoying a meal. And it's like, okay, they want to look, let's say, like successful people, like millionaires. What's the cheapest thing from a millionaire's lifestyle you could copy? It's not the car. If a millionaire decides to have a, whatever, Lamborghini or a Bentley or BMW. Now that they can't afford. But let's say the most low cost exclusive thing you can do is basically, instead of paying $10 for dinner, you pay $100 for dinner. So they take the cheapest, let's say, cheapest snippet of what one would think a very successful person's life would look like. And that's what they're showing. So obviously it's supposed to extrapolate that, okay, well, if they can eat fancy, they must be fancy people. And it's kind of the same with a lot of, when you see people brag about stocks. I mean, it's implied that, okay, look at me, I'm smart. Look how good my buys have been. Obviously, I'm a successful person. Obviously, I'm someone to be respected. Obviously, the person wants to feel like a big shot. So you show the snippet of something you did that looks good, and then it's up for people's imagination to extrapolate, like, oh, this guy is a killer. Look how he acts in stocks. He picks only winners, and for some reason he kind of brags, I guess, about averaging up, which is somewhat weird. But and it's like it says here, if I can translate it, Investor, that's the company, all-time high today, 300 feels inevitable. I mean, there's no, like, case. It's not like I think this is worth 400 or anything like that. Just I think the momentum is going to keep going, which makes it even a bit more silly. But I hope you get my points. Like, when you see stuff like this, the worst part is to get jealous, because again, you have no idea. I can just assume this guy is not that good, because I mean, most people are not good, but everybody looks good in a bull market. So everybody has some stock that actually did well, at least. So that's what they're going to be bragging about. So you're going to see that on Twitter typically, and you're going to see it in a bull market in juniors, that I can guarantee you, about people wanting to look smart. And you see stuff like this, and then you look at your portfolio, and you're like, whoa, this guy's crushing it while I'm sitting here minus 50%, let's say, in junior miners. And again, forgetting that this is just a snapshot. He might be down a shit ton before this graph happened in his entire portfolio. And this might make up, who knows, 5% of his portfolio. And this average is like, I don't know, 250, and it's up to 290. So I mean, how big of a deal is it really? No, but it's going to affect people. And then they're going to start to, oh, I got to do something. My portfolio is not doing what his stock is doing. Oh, my buys don't look like this. Yada, yada, yada. So I want you to remember that. There's a saying in Sweden, I've said it before, empty barrels makes the loudest noises. Again, it's not like I have a 100% up to speed what this guy is exactly doing or how his portfolio has been doing, but balance of probabilities is that this is probably a poor investor, because most are. My point is, again, is like, try to brush all that aside. Don't look at, compare yourself to some brag snippets of a portfolio, because it's the same with the girls on Instagram. Oh, every second post is, or every other post is, them having a fancy dinner at some hotel and drinking what looks to be champagne and a nice dinner. But it's like, yeah, but they might spend 40% of their net income every month just to look like they're successful, but they actually can't afford anything. The only thing they can copy from a quote millionaire's lifestyle is what they eat, consumables, what they spend on I mean, obviously you don't buy dinner for $100,000, but $1,000 can or $100 can look very fancy. So that's what they're going to be copying. And then as you know how it works, when you see that, you just assume. It's like, oh, they have this slice of a potential millionaire's lifestyle. Then you kind of, add all the other attributes. Oh, they must be very successful. They must be very classy. Excuse me. It's like, oh, they must be really top-notch girls that deserve another, a fellow millionaire boyfriend, for example. No, it's pure. It's pure brand management, and it's ego stroking, and it's attention seeking, yada yada. Anyway, well, that was a long rant, but I hope you get my point. It's like, just see these posts for what it is. People obviously highlight what they can highlight. And if it's stuff like this and they feel the need to, oh, look how smart I was, for example, most of the time the truth is the polar opposite. Because I mean, this person, I mean, what's really impressive if your portfolio is up over, a lot over 10 years, not if you're up, not even if your portfolio is up in 1 year or 2 years. People who are up 1,000 or 2,000% in Dogecoin, they might have zero now, or down 90%. So a year or two, it doesn't matter, especially on a stock by stock basis. Believe me, if I only had winners, I would be a billionaire already. But the interesting part here we have another guy, also from Swedish Twitter. And this I found very interesting, because it's like the polar opposite. This is the contrast. So this is what you mostly see, or what I mostly see. And you probably see it as well. Again, either they're buying the exact lows to buys or whatever. Again, the only stock they might have done that in, or whatever. They don't typically brag about their portfolio. The really successful ones, they tend to brag about their portfolio and not individual stocks. That's kind of almost a rule of thumb, because they know that it's like there is no real. I mean, it's not a big deal if you make money on any stock in any time frame, really. But anyway, so this is what mostly, and then I saw this guy, he's like, and he points that out. Many tweet, I buy companies in an uptrend and sell, I don't even know if I can do this in Swedish. Oh yeah, okay, I'm gonna translate. A lot of people tweet, I buy companies in an uptrend and, well, this doesn't make sense, but basically, and sell in a downtrend. I think I can translate the rest just here. Many seem to be really good at it. Personally, I work to do my best to buy downtrends and to pause in uptrends. I don't see tweets like this a lot of the time. Compare these charts. Who do you think actually is up the most? I would bet a lot that this guy is okay. Sure, I mean the stock has gone up a lot more as well. But compare this guy. Yeah, it's what I say. It's not the buying high that kills people. Now, I've said this a bunch of times. It's not that. Yes, a lot of people probably that follow me, they got in maybe the 2020, 2021 highs. At least the people that started following me in the last few years. It's not that you bought high that's gonna dictate your long-term fate. This guy obviously bought high here. So, well, he actually started buying a dip at least, and he bought the next dip. So this guy's a good dip buyer, that's for sure. But anyway, okay, so he started off reasonably high, and this is not a junior mining stock. This is not a stock that typically is like, oh, when it turns, it's going to go up 500%. So actually, downturns is a bit more punishing in a sense, because there's less free upside from sentiment alone. But this guy is like, okay, went up, bought the first dip. Okay, went up, looked smart, dipped again to an even lower level. Okay, he had the stomach to dip by this as well, and I bought a bit here on this dip, I guess. So it's pretty obvious that he seems to have a natural tendency to buy stuff when it's gone down in price. So just straight off the bat, this guy probably is going to make a lot of money for the rest of his life. Just because he shows that he can do that, and you kind of only need one. I mean, this proves absolutely nothing. Oh, you can buy a stock that's in an uptrend. Wow, this guy, complete opposite. You need some balls. You need conviction. You need price to value mentality. You need to know that the market is probably stupid. And then it dipped again. So all of these buys are all of a sudden looking stupid. But that didn't discourage him. So he dipped, bought more, went up a bit, keeled over again. So now all of these, I mean the amount of buys that are all showing him, or telling him that he's being stupid, Mr. Market telling him that he's dumb, is going higher. So the evidence of him, quote, making a mistake in the eyes of Mr. Market is going up, which should make it a lot harder. Still kept buying this, jumped up, he paused his buying, okay, keeled over again. Okay, this might just be a few months. It's not like in the junior space where we're talking years of dip buying, but hey, I mean, that's from my last video. I don't know if I'm gonna upload it, but my point is like, the junior sector is not for everyone. This is impressive, and this isn't even close to what you're gonna experience in the junior sector. So I'm impressed by this guy actually. But if he could do this in a junior sector when the corrections last for years, I'm not 100% sure about that. Maybe. I mean, he has the right idea. Anyway, so popped, stopped buying, and then again. So maybe his average is here or something. Because he bought like every dip. Okay. So this cluster of buys, he has an average of here, let's say sub 200. Jumped up, jumped up, jumped up. Maybe some news happened here, I have no idea, but it was a small dip, so he bought. Maybe he got a bit of FOMO, who knows? You can forgive that. Again, it's not the buying high that kills anyone, not even in the junior space, because any stock can go down 100%. Even if you bought a junior minor stock worth $1 trillion, the worst thing that can happen is that it can go to zero. But there's also then an entire sector that when you go from the lows to the next sentiment high, they tend to go up hundreds and hundreds of percent. So you can buy the most overpriced junior out there, unless you go all in, and you get absolutely nailed on it. Minus 19, let's say minus 100%. That does not change the fact that the entire sector, every stock that's around going out of the bottom, fast forward a year or two, probably going to be up hundreds of percent. So one stock is going to pay for more than one stock that actually went to absolute zero. So, but let's say he got a bit FOMO here. Okay, sure. I can see it. Almost punished immediately, quote punished, went down. He went into his dip buying mode again. Bought, went down, bought more. I guess there was a flush this day here. So he bought this low, jumped up a bit and keeled over, bought, went down even more, and now you have a cluster. Notice that especially here, like that's three buys, a bunch of buys. So he seems to have a natural instinct. Like the worse a correction has been, if nothing else changed, he's buying more. At least the frequency of buys is going up. Okay, so maybe the average of these buys is here and these buys is here. So this $200 is, or 200 kroner is his average. Now it's up almost 50%. Oh, actually, okay, the time frame was longer than I thought. So this was actually a year of a downtrend. Okay. Yeah, still. And this is a much shorter time frame. But the point still stands. This guy, we don't know, maybe he amassed a very large position. I gotta assume that this guy probably bought a few. I think he probably ramped up his buying. He bought more the higher it went, just from the from the sake of that it went higher basically, and then talks about 300 feels inevitable. It's like, well, if he's, it makes it sound like 300 is a big deal. If you think 300 is a big deal, now I'm putting words in his mouth, and I probably might have said the same if I was in his shoes. still, it's like it's 290 now. It's like, who cares if it goes up 10 kroner more? I mean, if you thought, because this is one of the safest companies out there, if a 10 kroner pop from 290 to 300 is a big deal, then you obviously have probably no idea what you think the value is. You're just a momentum trader. When I'm buying juniors, I think it's like, oh, let's say it's at $3. Hopefully, I see that the value can be $8, not 3.1 bucks. So yeah, I just thought this was extremely interesting, because you see, it's like both of these people kind of brag. Yeah, I think I would say, even though it's very impressive with his dip buying. But of course, I mean, it again, it's like down here, he looked 100% wrong on all buys. Down here, he looked wrong on all these buys and every buy up here. And then all of a sudden, he's in the money on all, 50% average on every single buy. Whereas this guy kind of looks smart at every buy, relatively quickly as well. The worst buy was like, I don't know, this maybe, where it went down for, I don't know, a week, 2 weeks. Do you think this was very testing? No. Is this impressive? Is this challenging? Is this something to brag about? I don't think so. This is exactly what everybody does when they buy high as well, right? How is it something to brag about that you can buy a stock in an uptrend? Especially when you're talking about, oh, 300 feels inevitable. Jesus. Yeah, and then I looked into his profile a bit. It seems to be, well, that's a different story, I guess. Anyway, I thought this was very, very interesting. But I hope you get the point, the contrast, that these are two completely different types of investors, I would say. And he even points out that he sees many tweets, I buy companies. That's the stuff I saw all the time leading up to the 2020 top, the Corona top. I saw articles in like Swedish online papers where it's like, oh, Felicia 24 is a day trader all of a sudden. Or I read some story where it's like I think a 50-year-old daycare worker had become a swing trader. And basically, I don't know if I had access to the actual articles, but it's like, I think I looked at one and there was stuff like, oh, I just buy solid companies in an uptrend. It's like, whoa, oh, and we were, the stock markets were at all-time high. So of course they were making money. Of course, just buying anything in an uptrend worked. Because at an all-time high, you look smart on every single buy. Like this guy. This guy actually had to work for it. But who knows how big his position was. That is like on average at the end of the day, obviously his position grew all the way. So it's like if we compare, yes, this guy is up whatever the average is. Let's say his average is 260. So it's up to 290. It's like, whoa, whoopie-doo. Even if it's a pretty short time frame though. So it's like from a compounding perspective, that's very impressive if he could keep that up, obviously. But this guy, we have no idea how big this position got. Because this was just going up. And it looks like the frequency of his buys went up the lower it went. So let's say this guy got 10%. Now I'm making stuff up, but still, let's say at the end of the day he had 10% of his portfolio in Lifco, and he's up 50%. That's a 5% portfolio boost. This guy, who knows? I don't know. Let's see, it's up to 3% of his portfolio. And he got a average, whatever that is. Let's see here. 290 minus 260 divided by 260. An 11% pop. Probably on a smaller position size. Maybe we can see if... Oh, actually. Here. I gotta eat some of what I've said. So investor is apparently 21%. But I do doubt... Let's see. Portfolio plus 17%. Plus 17%. That's not bad. I can't find any more evidence. So I have no idea what the position size is, but you can kind of see it's like Alphabet, LVHM, a fund, investing company, a fund, an investing company, an investment fund, investment company fund. I don't know what it is. Fund, Alphabet, yada yada. But I do think still that my point stands. I think this guy's probably working with a small amount of capital. He's like super diversified. He has a bunch of the stocks that have done really, really well. And you see, yeah, I mean, a pinned brag post from 21st of May that his portfolio is up 17%. Who knows? Maybe it's you know, it's down now. Maybe. But still, it's like we actually have no idea. Maybe he bought in this entire portfolio or his investor position in this chart here, in this slide here. Still, then maybe his average is still 260, and he's up 11% on it. So sure, 11% on a whatever it would have been of the portfolio before it reached an all-time high. That's, I mean, that's you know, relatively good, but in the grand scheme of things, it's pretty much meaningless. 11%. I mean, that's well, maybe not the broader stock market swings 11% every day, but still, that's like, oh. You know, and who knows? Maybe he bought most of it up here, and then it would be even higher than 260. And he has though a pinned tweet, and again, that's just from, you know, this year, and it's not even updated. Obviously, you know, for all we know, it could be down now. But that's kind of my point. It's like it's pretty obvious this is a braggadocious guy. And as I assume, as soon as he has something that looks good, he's gonna post it. Like this might have been the all-time high so far of his portfolio, so he keeps that, and yeah. So I'm just taking a wild guess here that he might. Is he born 2001? Maybe. Still, okay. It wasn't that. It appears it's a much big, it's its largest position actually. Still, I think it's 100% valid. Well, pretty much valid. I wouldn't brag if my largest position was up 11%. Yeah, and this like, oh, 300 feels inevitable. And anyway, I think these were two very contrasted. Like this guy, he would probably make it in the junior space sooner or later. This guy, I have no idea what. I don't think this guy would do very well. He's obviously very good at buying in uptrends, but that goes for 95% of people. Let's see, what am I up to in terms of time here? 34 minutes of ranting about this. Anyway. let's dig into a few more stuff. I just popped into the premium nickel room. I think this is something that a lot of people... This is Warren Irwin, by the way, the pretty famous fund manager of Rousseau Asset Management. I would say he's obviously biased. I think they have a huge position in Premier Nickel. But still, notice what it says here. A stock will never run if there's a financial overhang. Doing the issue now allows it to run on good news, otherwise nobody will buy the stock. They will just wait for inevitable issues. Seen it happen lots of times. That is an extremely important thing to remember. I see that in a bunch of stocks, and have seen that in a bunch of stocks. Look what happened in Western Alaska. No change to the project. They even tabled a 100 million ounce AG equivalent resource with 1,000 gram per ton AG equivalent. No reaction. Downtrend kept going, basically. Why? Because everybody knew that 100 million ounces probably doesn't cut it. Not that, I mean, if silver went to $50, I mean, or zinc went to whatever. So it's like it's an impressive, a very impressive grade, exceptionally impressive grade. And 100 million ounces AG equivalent is nothing to sneeze at, but it probably needs to be bigger than that, given where it's located. But they've only explored like a fraction of the land package. So I mean, if that won't grow, I don't know what Mother Nature has done there, because it's a CRD system and they only drilled a sliver of one skeletal finger, basically. But anyway, the point is that I get emails and stuff from people who like, you see these stocks go down. Like lately I got an email about Fathom Nickel, for example. It's gone down to 4 cents, I think, today. I mean, I thought I got in cheap when I participated in the recent placement. I think that was like 12 cents. So it's down, what, 60%, 70% from where I thought it was cheap. And I would say it's an easy explanation. To do any more real work, they need to raise money. Okay. Last time in the private placement, I got warrants. Warrants are nice for a risk taker. Warrants are nice, especially if it's a discovery play. A lot of pre-discovery plays actually is like the risk reward is completely different if you get warrants in a placement or if you buy in the open market. I mean, I think like the hot copper or the copper poppers that I talked about, I think all of them are cheap. I think the risk reward is positive for all of them, I would say. But it would be even more positive, obviously, if you had warrants. Let's say that, 2-year 2-year warrants. Those companies tend to be after big targets, copper porphyries, the ones where it's like, okay, probably they're not going to find anything of significance. If they do, it could go up hundreds of percent. If you get warrants, that's an extreme leverage on the off chance that they actually make a significant discovery. You might end up making like 80% more than if you had no warrants. So even though every shareholder would make a lot of money, if you had warrants, you would make even more. And obviously you don't have any more downside really. Yes, you have a lockout period, but you get more upside, and still the downside is still 100%. So it skews the risk reward immensely, I would say. But keep this in mind. Remember this. It's not 100% accurate. Well, in the sense that it doesn't happen to all stocks. Because sometimes, well, first of all, it's like, maybe there's something else going on. Maybe people think that, we need to buy in the open market because they're gonna take care of the financing in some other way, for example. But as a rule of thumb, if you know a company, and especially in a 3 to 4 year long or a 4 year long bear, most juniors can only afford to raise money, because also they don't want the additional dilution, can only really afford to raise money that will allow them to make, to do some drilling in the next drill season. When the next drill season is out of the way, people know, oh, now they're going to raise again. So when people, let's say, email me about, like Fathom, for example, I think that's the hands down simplest explanation, because nothing, the drill results they put out were actually quite good. Up to 3% nickel equivalent. So that's like, I think 2% nickel equivalent is like 8 grams per ton AU, I think. Maybe it's not 8 grams per ton. Maybe it's a bit lower than that. Maybe it's 3% nickel equivalent. Anyway, so they hit high grade nickel. They show there's high grade nickel in the system, or more high grade nickel in the system. Still, stock didn't really react. Stock is down. Why? I think the simple solution is that people know they're gonna need to be raising money. Okay? So if you have a position of Fathom nickel and you think you could get into the private placement, what's the downside of selling the stock now, driving down the stock price, and let's say they will have to raise soon. So when they do raise, they probably will have to set an even lower share price, and you might get full warrants or half warrants. The value of those warrants in that case will go up even more, because they start off from a lower level. So that's actually the most simple explanation why, again, as a rule of thumb, I would say any exploration junior or pre-discovery junior, whatever, that does not yet raised money to do work, that stock is probably gonna stay around these levels until financing is out. The funny thing is, a lot of the time, everybody fears the financing dilution. Dilution is like the worst word for people for some reason, even though it's like goes without saying that the reason people raise, let's say, $4 million is because they think they can create, $30 of value from that. So dilution is, people get surprised when dilution comes. It's like, oh, they're raising again. It's like, yeah, how else do you think they're going to create more value? You're not going to see the growth curve unless you have dilution. But anyway, so that I'm just going to open the window. So my point is that if one of your favorite juniors, or a junior you're looking at, hasn't really participated in the rally started 4 months ago, 3-4 months ago, if you think they need to raise money, that's probably the reason they're not up. Because until they have money, you can create catalysts, right? And if people know that, which they do, then people who, let's say, are thinking of getting into the private placement and hope to get a warrant, for example, they're probably going to be selling down the stock. What I think is a mistake a lot of the time is that you have these exaggerated corrections in some stocks that are in those situations, and people start to believe that things are much worse than they actually are. Most of the time, nothing happens with the projects even. They just go down simply because of that reason. Okay? And then, when people can't take it anymore, they sell. And then a financing is announced shortly after. And that proves to be the bottom. So even if you didn't get into the financing with warrants or whatever, the intact stories, if they're down a lot, I think it's a mistake to be overly concerned about a private placement and about dilution, because you're probably buying it very cheaply, including dilution. Time is running away here. Let's see what. Yes. This is I participated in Mogotes Metals. They did they've been private. They actually started trading today. I almost kind of forgot that I had this position because I think I invested like, I don't know, 8 months ago or something. And there was never any guarantee if when they were actually gonna. I think it was kind of assumed that they were gonna do a IPO or get publicly listed, but so it happened. I got the word basically today, and it started trading today. So this is also a copper popper. I thought I didn't need a lot of due diligence to put money into Mogotes. I think the reasoning is quite simple. They're in the Vicuna copper district. Here you see, it's called the Field of Serve project. Shit. It says confidential, not for distribution. I think this is fine. Anyway, yeah. So I think this is fine. I got it today, so yeah. Well, anyway, maybe I guess it was confidential until the public listing. Anyway, yeah. So I'm gonna assume that. So they're in the Vicuna Copper District. They have a web page, by the way, mogotesmetals.com or something. This is where Philo and NGX are. Let's fast forward here. See market cap at 17. So I think the market cap is around maybe 29 million CAD right now. Not so. I mean, there's pre-discovery juniors that for sure are cheaper than this. Still, we're gonna see why. I think it kind of makes sense. Here you see some of the shareholders. Oh, excuse me. Oh. Euro Pacific, I think that's Peter Schiff, right? Crescat, Sprott Funds, Lowell Resources Fundsman. Is that David Lowell? Well, he's dead. He's dead now, but maybe that's connected to David Lowell, the legendary copper explorer. I don't know. I'm guessing here. So common shares 205, not a small amount, and you got warrants and options to the tune of like, what is it, 50, 60? So quite a bit warrants and options. Some at least, or most of them at least, are 30 cents. So yeah, some overhang to be expected potentially, but that's the beauty of this, and that's why I kind of love, but like, swinging for the fences, because if you see a lot of warrant overhang and a junior is looking for a 1 million ounce gold deposit, it's going to be hard to create the shock value required to plow through those warrants, because even if successful, it's like probably not worth that much. But here's like the main. I mean, I think just this slide alone basically sums it up. Here you have the Lundin Group's NGX company. Here you have their Los Helados deposit, and this I think is the new discovery. And here you have Philo Mining's big porphyry discovery, and here you have Mogotes Metals, who have the rest of the Western Strike from here. I think I've been told how they got this land. I think Golden Arrow had part of this land or something. It is though quite interesting that they're like, I mean, if you want to have a closeology play, you probably want it to be on strike with one of the highest valued junior explorers that happens to be a Lundin company. And you can see it's like, okay, here's Lundin Mines Jose Maria deposit. Big deposit, big discovery, massive discovery, and here they are. And these are the targets. Historically underexplored with data techniques and limited drilling. The 2023 results show new and significant target areas for exploration and drill testing. Geophysical surveys conducted across the project. yada yada. I think this presentation is up on the site so you can look for yourselves. But again, I keep coming back to the fact that I think the best case is a simple case. A no-brainer should not need precision. It's like, should Mogotes be valued at 35 million or 25 million? Well, it's a pre-discovery play. Should it be at 10 million? Or, given the neighborhood, should it be at 50 million? Who knows? The simple bet that I see, and I'm not all in on this story, but it's like, I took a decent chunk. The simple thing is that, okay, we know what valuations the neighbors get. We know what kind of deposits are found here, obviously. This is like the biggest, well, it's a high sulfidation plus porphyry discovery, if I'm not mistaken. This is like the biggest discovery of copper in, I don't know, long time, let's say, on planet Earth. They have the neighboring property. So even though this is very high in the Andes, this has a 3.11 billion market cap right now. Okay. Mogotes has 7 targets. Mogotes has a market cap of 29 million, I think. Okay. What's the case here? The case is they're right next to an absolute giant. There's other very large deposits nearby, just to the southeast, and a bit away from this trend. I mean, the Jose Maria, for example. Is there anything that says that all of a sudden here the favorable geology stops and these targets here are going to come up barren? I mean, I think it kind of would make sense if they find something here. Anyway, simple again, and here you can actually see I think this is the copper in soils anomalies. Excuse me, getting late here. So you see there's quite a bit of copper anomalous copper here, and covers a pretty decent chunk. I mean, this anomaly is pretty much as big as this anomaly here. Here, interestingly though, note the limited surface copper in soils. Question is, did all the anomalous copper on Mogotes land come from deposits that are not on their land? I mean, is it possible? Sure, but they have some apparent, pretty, I think, good targets. So again, just going back to keep it simple, the bet is that this is in real elephant country. This is as close you can get from a closeology perspective, basically. It's not like it's in the, when you found gold, for example, made their discoveries, like there popped up gold explorers all over the place. Some were like, we're 40 kilometers away, not even in the same geology. No, this is basically as good of a closeology play you can get, hence why I thought it was a no-brainer bet. So there's obviously going to be a ton of different scenarios going forward, but let's say fast forward 2 years. And they do some drilling. Let's give them 2 years. Either they're not going to find anything of substance. Obviously it makes, success here, given that this is going to be a standalone, this is so large that this would be a standalone deposit, and then you would build all the infrastructure, yada yada. Obviously the threshold for success for Mogotes gets lowered quite a bit, because anybody who buys this and they find even a satellite deposit, that's probably going to get mined as well one day, because if they do build all the infrastructure required to build something here, they're probably going to make use of anything else that's in the neighborhood, including, I'm trying to remember if one of these is actually in production. Anyway, this is obviously a hub, right? So when they develop this, everything here is going to get mined, and everything here is probably going to get mined sooner or later as well. So if you do that kind of capex investment, you probably want to make the most of it. So the threshold for success is thankfully lower. We have a reference point. You can just imagine. I mean, imagine. Let's think of it from the psychology point of view. Let's say they get a copper hit or whatever hit. Do you think people are going to notice? Yeah, I mean, the forum is probably going to be talking about the next Filo del Sol or the next Luna Housey or whatever. So you know it's highly emotionally triggered, I think. I mean, the torque on this, if they make a discovery, I think could be huge. People are going to compare it to the other ones quite quickly, rightly or wrongly, by the way. Yeah, simple as that. Do I need to know the exact, do you think I have any sort of like clear-cut exact value to say that it's cheap because I think on a risk-adjusted basis this company is worth 45 million, it's at 29 now? No, I have absolutely no idea what's going to happen. I just know that this is probably several no-brainer targets. It's in a no-brainer area, and all I know is that if they do end up making a significant discovery or two here, 30 million is probably going to look very cheap. And we know there's even super giants in the area. Yeah, simple as that. Philo NGX. Oh yeah, someone asked me about Hercules. You probably remember I wrote them up and did videos on them after they got the copper hit and before Barrick got involved. I have Hercules still in most of the HODL portfolios, but I don't think. What do I think? What do I don't think? Well, first of all, it's like the next result, the next results they came out, the follow-up drill holes were not as impressive as that theorized super gene blanket, which I'm not even sure is a super gene blanket. But it's like they get a shit ton of money from Barrick. Of course, I think they've already started drilling actually. Commences phase 3 drill program. So this is very much a very alive story. There's even companies popping up around them trying to go for copper as well, because those kind of copper hits probably don't fall out of the sky. So is this a live story? I would say very much so, very much a live story. But it's at 180 million, and basically, well, first of all, the hits change things, right? Or, well, that they didn't hit as good afterwards. So it wasn't that immediate pow effect where it's like, geez, we hit this, and then we, started to delineate or, grow it immediately. No, they did some, I think it was kind of blind scout hole drilling. So it's like, you're kind of guessing in that respect. And they didn't get the eye-popping results, so the stocks sold off. Okay, kind of makes sense. It was very hyped. A lot of eyes on it. People were buying in because they thought the next hits were going to be even better, probably, or at least as good. They weren't. Okay, so sold off. Still, like I said back here, they have only touched basically their copper target. They have not flushed this out in any way, shape, or form yet. Barrick cashed them up immediately. I think they even bought in the open market. Didn't they? I was pretty sure that they bought in the open market. Maybe not. Okay, I think someone said... anyway. They have a lot of cash. They started drilling. Do I dislike this story? No. Personally, if I remember correctly, I bought on this dip But then as the junior sector overall started creating more and more, I think the low was in March. So whereas Hercules went sideways, the junior sector went down. And I found other stocks where it's like, oh, okay, now this one has gone down 30%. Now I actually like it more. And even now, it's like, okay, 180 million. Is that super cheap? I don't know, man. I mean, it's like, I like to compare stories sometimes like this. This is 180 million. Inflection's market cap, for example, also a Copper Explorer, 18 million. So do I think Hercules is worth 10 Inflection Resources? Inflection has 200 kilometers of strike. They have 29 target areas or something. The ANT survey, which I'm going to get to, seems to be showing promising early results. So 10 of that would be 290 porphyry targets, all funded by a major, where funded the PFS in Australia, where they've already, probably found a porphyry of some sort at least already. Do I think I'm gonna make more money owning? I mean, basically one could say that. Yeah, no, my mind is a bit slow right now because it's so late. No, I don't think Hercules Silver is worth 10 times what Inflection I'd rather own, if I had to buy them, if I had $180 million, I would rather buy 10 Inflection Resources for 180 million than one Hercules Silver. So what I mean by that is like, yes, I have in at least a few of the hodl folios, Hercules Silver still is a holding, but other stuff went down more in price. Like Inflection, who has been putting out a bunch of news, its price has gone nowhere. Whereas Hercules Silver, well, they've also put out news, but it's like nothing really material. Point Charlie Grieg showcases deep seeking geophysics, so it's like nothing really spectacular or material. Where some other companies, I think, have put out material news and the stock prices have maybe gone sideways or down. So I actually, and that's the thing, it's like there's a bunch of stuff that's cheap out there. They have a big silver resource as well. So that's kind of a margin of safety. I mean, if silver really takes off, they have a bunch of silver. So I'm not going to say that Hercules is overvalued. In that case, it would be no portfolio. What I'm saying is that, especially since I'm so tight on cash most of the time, I got a lot of stuff locked up in private placement. So personally, and I also am more okay with the hodl folios are supposed to be hodl folios, whereas you own 30 stocks and you don't do much. Whereas like in my liquid portfolios, I'm very much more concentrated because I don't have that much money to go around because a lot of the money is locked up. So I have to kind of focus into some of the highest conviction stores, let's say. So I don't consider Hercules to be the one of the highest conviction stores I know of at 180 million. That's it. Oh geez, I'm not going to even have time, I think, to go through the rest, I think. Yeah, I don't think so. Now I'm gonna do these tomorrow. I'm pretty sure the video is already over 1 hour. Yeah, so thanks for listening. Assume I'm biased. Assume I own shares of all companies mentioned. Assume assume some are sponsors. Inflection Resources is a sponsor. Magna is a sponsor. Inflection is a sponsor. So yeah, make up your own mind. Do your own due diligence. Not investing advice. Take care, guys. Bye.